Netflix just tried to buy Warner Brothers for $83 billion. Saudi Arabia took EA private, and Foxtel got snapped up by a British sports streamer. There's a massive land grab going on in digital entertainment right now, and in this episode, we're going to be breaking down where the growth is and how you can invest in it. Welcome to The Decade Ahead, a 10-part series where we are unpacking 10 themes that we think are set up for the next decade. My name's Bryce.
And I'm Ren, and today we are talking all things digital entertainment. Streaming, video games, or streaming both video and music.
Yep.
It has become a massive part of our lives, but for a lot of investors, it hasn't become a massive part of their portfolios.
No.
So we're going to talk about the industry that is changing, the growth rates, the particular growth pockets of the industry, and how we think about investing in it.
The Decade Ahead is brought to you by ANZ Business Start Right. Starting a business comes with a lot of what-ifs, and ANZ is here to help you with what's next.
All right, well, let's get into it, and let's start with what's happened over the last 6 months, because digital entertainment is in vogue. It's so hot right now. The mergers and acquisitions activity has picked up.
Particularly over the last 6 months, we've seen some huge acquisitions take place. So Netflix and Paramount, they were in a tug of war over Warner Brothers. Saudi Arabia's private private investment fund?
Yeah.
Yeah. Public investment fund.
Yeah.
They took EA private for $55 billion. And then a sports streamer called DAZN, they bought Foxtel for $3.4 billion. So some pretty massive M&A happening with some very, very well-known media giants.
And what they're saying, and really what the rest of the world is saying, is that the overall digital entertainment industry is growing massively. It's gone through its period of disrupting legacy media.
Yeah.
Legacy media is well and truly disrupted. But the growth rates that people are assuming are pretty massive. So to put some numbers to it, if we start in the US today, the US digital entertainment market is a $971 billion market. You think that's big? Wait until 2035 when it's expected to be $1.43 trillion.
Wow.
That's just the US. Globally, the market today is a $3.2 trillion market. It's expected to reach $6.2 trillion by 2035. For those eagle-eared listeners, they would notice that the global growth rate is faster than the US growth rate. That's a little tease of one of the big themes we're going to be unpacking today.
Well, Ren, let's just get straight into that point because...
you don't like the tease?
No, I don't like the tease. I like the tease, but we're now in it. The reason this is an interesting industry to look at is because it's booming, and one of the biggest drivers is coming from emerging markets. So that's why we're seeing global growth outstrip the US growth. It is the fastest growing, or one of the fastest growing segments in digital entertainment, being defined by the booming middle class.
Yeah.
So you've got India, you've got China, you've got Indonesia and Brazil with an emerging middle class that are now starting to engage with digital entertainment.
Yeah, one of the first things you see when consumers have discretionary spending, when they hit that middle class level, I guess you'd call it, is leisure spending. That discretionary spending bucket starts to really increase. So that's one thing. It's just like more disposable income, more spending on leisure, and digital entertainment is a big part of that. The other big thing that is happening is the rise of cheap smartphones.
Yeah.
And internet penetration. And so all of a sudden you've got literally billions of people who have more money in their pocket, access to a digital platform that they didn't have before, and connection to the internet. And so we're just seeing an explosion of global spending on entertainment. It's no longer just really a US focused story. Yeah.
So that leads on to the second reason, Ren, why now is a great time to be looking at this industry, because, you know, off the back of the rising middle class, internet penetration, there is a quiet rise in mobile gaming.
Yeah, I think this would surprise a lot of people. So if we just ask, where is the money in video games in particular? You would assume consoles, PlayStation, Xbox. Other people would assume PCs, like computers. But mobile gaming is the biggest segment of the gaming market. In 2025, the global gaming market was $188.8 billion. The mobile portion of that was $103 billion, so 55%. Consoles were second, 24%, PCs third, 21%. To put that in context, in 2015, mobile gaming was 35% of global gaming revenue. By 2020, it was 48%, and now it's 55%. So the video game industry is growing, but mobile is growing faster than the industry. It is taking market share from its console and PC competitors.
You still playing Candy Crush?
Oh, mate, level 4,000 on Candy Crush. You got to keep buying those boosters. That's the big thing. and I think that is the thing. Like, mobiles drove microtransactions. And for people who are unfamiliar with video games, the era of buying a game and being able to play the game is long gone. It's now how much money can they squeeze from you while you play their game.
In ecosystem.
And Chinese mobile developers really pioneered it. Then it came to the West. And then it came to consoles. And now, you buy loot boxes and the like on everything.
And those stats would be great for Apple as well, because they would be taking
30%.
a clip of everything.
Yeah.
I imagine that's still the case.
Yeah. We're generally talking the decade ahead, but if we even just shorten the time period, between 2021 and 2027, mobile gaming was projected to grow almost 50%. The revenue there, 50% in 6 years. Like, this thing is growing quickly. A big part of that is everyone spends all day on their phones, but also more and more people have phones globally.
Yeah. I notice it on the tram to work. A lot of school kids getting on. I mean, the quality of the games on the video these days is incredible.
Yeah, dude.
Go on to the Snake. You know, remember the Snake from the Nokia 9010
Jeez, you're showing your age there. To keep peppering you with stats that illustrate a point we've already made.
Okay.
Between 2020 and 2025, console revenue expanded at just 7%.
Yeah, right.
Mobile gaming grew 63% in that window.
I guess it's because also, like, you have to go out and specifically buy the console, whereas you've kind of got the mobile for other utility as well. It's like...
Yeah, it's easier.
It's easier. You've got it in your hands. Yeah.
Yeah. And so if we extend the timeline, then I'll stop throwing you stats at you.
This guy loves mobile gaming.
Yeah, well, I just find it fascinating that the way we think about entertainment is completely backwards. Like, there are three big categories here. There's movies. There's video, I guess you'd call it now, TV, movies, and YouTube and stuff. Then there's audio, podcasting, audiobooks, and music. And then there's video games. People just assume that Hollywood video is the biggest of the three.
Later, yeah.
Video games is much larger.
Yeah.
And then when you think in video games, consoles, PCs, mobile, no one thinks about mobile, but it is the biggest and it's the fastest growing and arguably the most exciting. Probably they're not the most exciting games, but most exciting investments.
Yeah, it'd be interesting to talk to a kid about it because they might think it is all about mobile.
Yeah, true. We're old. So, no, let me tell you my last stats.
Okay.
So, right now, we're at about 100 billion for mobile games, revenue per year. The range, depending on which research house you look at, is between 250 billion and 370 billion by 2035. So they're expecting sort of a 2.5 times or more increase in that time.
Wow.
Yeah.
So we have emerging middle class. We have transition to mobile gaming and growing incredibly quickly. The other reason, like, why now? Why is this a theme for the next decade? Is obviously AI is coming in and turbocharging the efficiency at which a lot of these companies can generate and distribute their content.
AI slop,
yeah. So Netflix, they've expanded real-time AI dubbing in 2025 into 2026. So now a show can launch globally in multiple languages without needing captioning per language. We're seeing AI recommendations and tailoring booming. Netflix, Spotify, YouTube, Instagram, all improving algorithms using AI.
Yeah.
I actually don't notice that in Netflix that much. I tend to think my algorithm in Netflix doesn't give me a lot of new stuff. I find it similar to my frustration with Spotify, but I can't argue with YouTube.
Yeah, YouTube's the best. They all use AI. I think the jury's still out on the revenue potential of AI-generated content, but I think the jury is well and truly returned a verdict on, can AI save these companies money?
Yes.
Can they reduce editing costs? Can they, make special effects cheaper? Like, can they do things with less headcount, et cetera, et cetera, et cetera? From an investor point of view, if you think about some of these entertainment companies that are in fiercely competitive industries, everyone has subscription fatigue. If they can find ways to operate cheaper and lower their prices, like, you can see subscription numbers boom.
Yeah.
Yeah.
So if we turn to how the industry is broken up and where the revenue comes from, there's really two main buckets. There's the consumer, which is what you and I pay, Ren, and then there's the advertising side of things. So consumer side includes obviously things like streaming, music subscriptions, all of the video game stuff that you just spoke about, Ren, video on demand. It's really what you and I are paying to engage in the industry.
Yeah. And then the second one is advertising. I mean, we all know what advertising is. I don't really need to explain it. You obviously see a lot of this in mobile games. I'm going to be the mobile gaming guy.
We're back to mobile games.
It always leads me back to a stock that I remember IPOing and remember thinking, God, 2021, anything can IPO. The stock was called AppLovin. It's up more than 600% since I had that thought.
So they sell and place ads in video games. Is that what they do?
I'm not actually sure if they serve Duolingo, but are you testing Duolingo as well as Simon and I?
No.
Oh, okay. Well, so Simon and I have been using Duolingo, 111-day streak as we talk.
Nice. What language again?
Indonesian.
That's right.
But, every time you do a module, you then get an ad. Or when you play like a game on your phone, often between levels or whatever, you'll get an ad. They serve a lot of those ads. I thought they had a silly name. Their business model, not silly.
No.
But yeah, advertising is big across sort of all facets of the industry now. Spotify has a big ads business. Netflix is building a big ads business. Amazon Prime has a big ads business. Well, Amazon itself now has a big ads business. Yeah. So yeah, more and more advertising is a meaningful part of the overall mix.
Yeah, well, I mean, to put some numbers to it, advertising revenue is growing 3 times faster than revenue from the consumer side of things. So as more and more people turn, it's becoming a more attractive place for advertisers to advertise. I even think that we tried to do some mobile game advertising at some point for the dive. Yeah.
Well, let's dig in. We said that video games was the biggest category here in our digital entertainment bucket. So let's maybe dig in on them for a minute. As we said, bigger than the global film and music industry. From a revenue point of view, they generate roughly triple the revenue, the video game industry, triple the revenue of the global film and music industry combined.
That's crazy. Yeah. So $310 billion of revenue in 2024, forecast to hit $414 billion by 2029. And as Ren has made clear multiple times, mobile is the largest slice of that.
Now, here's the thing. 43% of the population are gamers.
Oh, good. I'm still glad I'm in the majority of non-gamers.
Or are you a gamer?
No, I don't play a single game.
I don't have any fun in my life.
Yeah, no game. I reckon you'd be hard-pressed to find a game on my phone. No. I might have to have a look now. I was a gamer in primary and high school.
Okay.
Then that just stopped completely in uni.
Yeah.
Even though I lived with some big gamers.
Yeah.
And then, never really progressed with it.
Fair enough.
What about you?
Well, yeah, like I played FIFA and stuff at uni, played like GTA growing up.
Yeah.
What do I have on my phone? Oh, I have a backgammon app on my phone. And sometimes, particularly on flights, when I'll play it.
Yeah. I'm looking now. All I've got is the Apple games on my phone. HQ Trivia, remember that?
Oh, that was good.
Yeah. Heads Up. These aren't really games, though. No, these are party entertainment.
I downloaded chess on my phone, but couldn't get into it.
Okay.
And also tried to download Bridge.
Oh,
couldn't get into it.
Fair.
Yeah, more a multiplayer game, that one.
Anyway, 43% of the global
we're old.
I know. So that's 3.6 billion people playing games.
Yeah. Anyway, sorry. I'm just looking at myself in the mirror and thinking about what games I have on my phone now. Let's reset. The next point we have on this is once again that smartphones are the cheapest and most accessible and most convenient form of gaming. 94% of Gen Alpha and 92% of Gen Z play mobile games.
Yeah,
so again, we're just too old to have a good
takeaway
sense
here.
of it. Yeah. But if you're thinking about long-term trends, if you're thinking about the form factor that will endure as people age into their big spending years.
Despite it being the largest entertainment category on the planet, advertising in games makes less than 5% of total global advertising spend. Big opportunity there for advertisers, and I guess for the space. If advertisers start to recognize the payback in this space, then that's where a lot of this growth is going to come.
All right, let's move to another big growth driver, which is emerging markets.
Yeah, we'll dig into it.
And maybe let's start with a fun fact. As a percentage of internet users in a country,
yes,
what country has the highest proportion of gamers?
Well, I've got the notes
Yeah,
here.
you do. Give everyone a chance to think.
TikTok.
Yeah.
It's the Philippines.
Yeah. The Philippines at 96%.
Wow.
So high that we did need to
Fact check
double
this.
check it. Well, at least Statista is our source.
Well,
for
yeah,
this, so bring it up with them.
Yeah, Statista's global consumer survey shows that the penetration is at 96%. The reasons that are driving this, the vast majority of Filipinos access the internet, guess what? Through smartphones. Very low barrier of entry. The median age of the Philippines is 26. So again, very young demographic there. So a lot of the reasons that lead to mobile gaming.
Yeah.
But it is incredible.
Yeah, Indonesia is second at 95%. Similar demographic story to the Philippines. But look, this isn't just about mobile gaming, would you believe? Because the emerging middle class is really impacting all of the categories that we're speaking about today. So let's just put some numbers to it. In 2025 alone, 100 million people were added to the global middle class, surpassed 4 billion in total. The majority of that 100 million came from the Asia Pacific. In particular, India and Indonesia are doing a lot of the heavy lifting now.
So as a result of this, Ren, the global online population grew by more than 240 million people in the same year. All online. But let's zoom in on India because the numbers there are pretty large. 806 million internet users in India, but there are still 440 million people not connected to the internet. So the runway there is pretty enormous. They have the third highest screen time globally with an average of 5 hours a day. And 70% of that screen time goes to social media, gaming, and video consumption, all entertainment, all ripe for advertising.
So Reliance Industries is India's largest company, or it was India's largest company. It's right up there. They have a telco, Reliance Jio, and they have created a smartphone. It's about 6,000 rupiah, which is about, 90 Aussie dollars. And so it's just created a phone that is so much more accessible and it's a pretty incredible story. The smartphone penetration, the internet penetration, what that's going to mean. About 10 years ago, India had its war on cash, if we remember that. Yeah. Now with mobile payments, it can have another crack at that. But yeah, we're talking about digital entertainment today, and it's led to a huge uptick.
So a lot of these stats, Ren, are around gaming and video consumption, but music streaming does make up a large part of digital entertainment. So let's move to music, where Latin America seems to be leading the way when it comes to growth. 23% growth in recorded music revenue. It's the fastest growing music region globally. Massive.
Yeah. So again, this isn't just an Asia Pacific story. It's a global middle class story, all driving the entertainment industry ever higher. So we've spoken a lot about what could go right, or I guess the growth that is occurring and some of the big drivers of it. But this isn't a one-way bet. There's been, trends and fads, particularly in the entertainment industry before. So where are some of the pitfalls that investors could drop into?
Well, look, the first one, people might just start going outside.
No, that's not a risk. Honestly, honestly, not a risk.
Look, it does seem like a bit of a stretch, and, there is a bit of digital fatigue going on, I think, particularly for young consumers. Some of them are starting to disconnect a little bit, but the overall trends from what we've just spoken about.
My view of it is people are disconnecting from one form of entertainment and just
social media.
Spending more time on others.
Yeah. I think it's not going to materially change.
Yeah. On a risk-weighted basis, I'm not worried about people touching grass.
No.
No, it's these days it's I'll go outside, but I'll put my headphones in. Yeah. Either way, we don't want to be alone with our thoughts.
I'm all right with that.
The ultra-competitive nature of the industry is one to be mindful of. And we started this episode talking about the M&A and the consolidation in the space. We saw Warner Brothers and Discovery merge, and now we're seeing Warner Brothers Discovery merge with Paramount. There's too many streaming services in particular. The stats around subscription fatigue, streaming fatigue are just so high. We found a stat that in 2026 alone, 37% of Gen Z streaming subscribers have cancelled at least one subscription.
I would argue that might not be streaming fatigue, though. That might be cost of living.
Yeah. The industry needs to consolidate,
Yeah.
or there's going to be winners and losers.
Yeah.
That's just something to watch, really, if you're investing in individual stocks. We've been talking a lot about the raw numbers of people growing the industry in like the emerging middle class around the world. There is also just the fact that a US consumer is a lot more valuable, draws in a lot more advertising revenue. The US dollar is a lot stronger, so their subscription is worth more for a global company. Whilst it's a great story about the emerging middle class from a pure investment lens, you're still looking at like the winners in the US are probably going to be the dominant players around the world.
Well, we're going to take a quick break, and on the other side, we're going to dig into some of the investment options that actually are available when it comes to the digital entertainment industry. We'll be right back. This episode of Equity Mates, The Decade Ahead, is brought to you by ANZ.
When you talk to founders and business owners, there's one thing almost all of them have in common. At some point, they had to take a leap.
Because starting a business is exciting, but it can also come with a lot of questions.
What if it doesn't work? What if I've missed something? What if I'm not ready?
The challenge is, if you spend all of your time focused on what could go wrong, it's hard to get started at all.
That's why with ANZ, you can start your business right.
ANZ helps new business owners get set up with step-by-step checklists, business setup tips, and cash flow tools so you can feel more confident taking those first steps.
And when you've taken the time to set yourself up right, you start to wonder, what's the best that could happen?
To learn more, search ANZ Business Start Right.
Thanks to ANZ for sponsoring this series and helping us keep all of our content free.
How many subscriptions do I pay for right now? I pay for 2. I use like 7.
I read on my Kindle every morning and every evening, and then sometimes I watch TV at night. That's really scary to think about, but I think I probably spend at least 4 hours a day on digital entertainment.
I like Terraria, Stardew Valley, those kind of games. A while back, I used to spend like maybe 15 hours a week playing games, some weeks more.
Well, we play a couple of games with this crew called a Raid Crew every Sunday and Monday night. That goes for about 3 hours a night, so probably about 6 hours a week at the moment.
I've been doom scrolling Instagram a lot lately. Yeah, that's probably my biggest thing, and YouTube.
You watch so much just naturally day to day on your phone and Instagram and Facebook that by the end of the day, I kind of don't want to turn on the TV and watch more screens. I think that's like quite nice, just sitting and talking and like, yeah, not being glued to a screen is quite refreshing.
Ren, we've spent the top of this episode talking about the opportunity for the next decade when it comes to digital entertainment, but the rubber hits the road when it comes to actually putting your money into some investments.
Yes.
So let's go through some of the core investments, then some of the niche entertainment plays, and then we'll close out with some of the ETFs that will give you exposure.
Well, I mean, let's start with the big tech companies, but let's not dwell on them. Alphabet obviously owns YouTube.
Yeah.
It's the world's largest video platform now. I think if it was spun out, it would probably be just as valuable as Netflix. It's a huge advertising business as well. So that, yeah, we can tick that one off as an option. Amazon is also a bigger and bigger player in the entertainment space. Prime Video is its streaming service. It's bought MGM Studios. We haven't talked about digital entertainment in books as well, but Amazon's basically the only game in town.
Yeah.
And audiobooks as well. It's not the only game in town, but it is definitely the biggest game in town. Oh, and Microsoft with Xbox and its gaming services there.
And I mean, the ebook market is tiny.
Oh, I didn't want to dwell on it. Yeah. But yeah, Microsoft is obviously a big player, so let's not gloss over them.
No.
But they're probably the big ones. Apple will ride the rise of internet gaming and clip the ticket along the way through the App Store, but they're probably the big tech stocks. Let's get into the pure play space and maybe let's stay in America to start with.
Well, the obvious one is Netflix, listed on the NASDAQ. We know what it does. It's pure play streaming. Dominant player at the moment, 300 million subscribers. They've changed their mix so that you can get ad-supported subscriptions at the moment, and they're the only streaming platform to really have successfully transitioned from subscriber growth to sustained profitability. Then the other one is Disney. They are obviously pretty diversified when it comes to entertainment assets, but they have Marvel, Star Wars, Disney+, Hulu, ESPN, but they've also got their in-real-life entertainment as well. They've got the theme parks, Disney on Ice, you name it.
The world's best company at monetizing the IP they have in multiple different ways. If you want to back the challenger brand, it's the Paramount Warner Brothers Discovery combined company. It's got, well, I mean, like it's a challenger only in the sense that it's not as big in streaming. It's got some of the best, particularly TV properties going around. Like HBO alone is incredibly valuable. Yeah. So they're probably the three main streaming stocks. If we turn to music, Spotify is the pure play option. Your other options, we go back to big tech, and we've got Alphabet and Apple. But as much as they are big platforms in their own right, the success or failure of their music businesses is not going to determine the outcome of either of those companies.
No.
So if you have a thesis around music streaming, probably the way to express that thesis is going long or short Spotify.
Yes.
Yeah.
Now we turn to game creators, game makers.
Yeah.
So Take-Two Interactive, the ticker is TTWO. They own Rockstar Games, which is their GTA franchise. I think GTA 6 is about to launch, from what I've seen, after years and years,
They
years
keep
in the
saying,
making.
yeah.
One of the most anticipated game releases in history. Currently loss-making, but nonetheless, again, owns some very, very good IP in the space.
Yeah. I think at this point we can leave America.
Yep.
I know Spotify's European, but it's listed in America. Let's go over to Asia because that's where the action is.
Yeah, we'll start with the big one. It's Tencent. They're listed in Hong Kong. They are the world's largest gaming company by revenue. They own stakes in or outright control Riot Games, which is League of Legends, Epic Games, Supercell, and dozens of other smaller studios. They also own WeChat, which is China's dominant super app, which we've spoken about on the show with over 1 billion users. So massive player in the space.
Yeah, and WeChat is like the platform upon which so many apps are built, including a bunch of gaming, streaming, entertainment apps. So they clip the ticket on a lot of those. Incredible company. Was my stock of the year years ago.
I remember. It was during COVID.
Yeah. Didn't have a good year that year. It was actually the year that Chinese tech really sold off.
Yeah.
So there's a number of other Chinese companies, but I think let's stay with the big hitters. Let's move to Japan because there's some big names over there. Probably none bigger than Nintendo. Huge IP, Pokemon, Zelda, Mario, the like. Has had a mixed success with consoles. Normally it has a huge success and then the next one doesn't do well. But it seems to have bucked that trend with the Switch 2.
Yeah.
Because the Switch did well and the Switch 2 has done well. It has probably had less success monetizing its portfolio of IP compared to Disney, but you'll often read investing thesis that basically say Nintendo is about to get it right.
Yeah.
You know, they're about to monetize their IP in the same way. They opened their first Pokemon theme park in Japan this year. So see how that goes.
Won't be going there.
It's pretty nostalgic for me.
Yeah, I bet.
I know. Another big player in the space in Japan is Sony, maker of
PS5,
PlayStation. Yeah, so we all know that. They had to delay the PlayStation 6 because memory has so expensive because all the data centers are taking
Who's
it all.
GameCube again?
GameCube was...
Is that Microsoft?
No. Is that Sega?
Nintendo?
Oh.
Yeah, Nintendo GameCube, obviously.
Classic. One that,
that never went anywhere. Anyway, that's Nintendo and Sony. There's a very niche one, Ren, that's been spoken about on the show once before, I think, is Cover Corp.
Yeah.
Now,
which one of these is not like the other? Like we're talking all the biggest game companies in the world and then this.
Cover Corp. Well, very interesting company. So parent company of HoloLive, which is the world's leading VTuber agency. Now, what is VTubing? It is where people create an avatar and then live stream through their avatar. Pitched by Arms on the show, so go and listen to that episode. But growing very quickly. It's a Japanese company, revenue growing at 50%. Very, very niche.
Yeah. And then to close it out, we'll go over to Europe to touch on one company that deserves a mention. Universal Music Group is the world's largest music label, home to Taylor Swift, Drake, The Weeknd, thousands of others. The interesting thing to note about the music industry, and I guess part of the challenge of us trying to cover so much is that we don't go into depth in any of them. But if you think about like Spotify's business model, it's all got these record label deals where like a fixed percentage of their revenue automatically goes to the license holders.
Yeah.
And so as music streaming grows, that fixed percentage of revenue also grows. And so they ride the tailwind of music streaming because musicians hate Spotify because they pay like, 1 cent a stream or something crazy. But there is an epic chart that shows how Spotify saved the music industry, which is controversial to say, but it shows music industry total revenue at peak CD sales, and it was like, swimming in cash. The Pirate Bay era and the LimeWire era, music just absolutely pumped. And then as an industry as a whole, it has really come back with music streaming. We'll try and find that chart and include either a link to the show notes or we'll flash it up on the screen. So Universal rides the coattails of the digital music revolution, I guess. And so as long as that keeps growing, they'll benefit, as well as they obviously pick up huge amounts of revenue from other ways that they monetize their artists. Events. Merch, blah, blah, blah.
So those are the pure play individual stocks, but if you don't want to have to choose and go do the research, there are a number of listed ETFs globally that you can invest in. So we'll start with the ones that are listed here in Australia. The first is the VanEck Video Gaming and Esports ETF. The ticker is ESPO. Very concentrated exposure to the largest listed gaming publishers and platforms. The names that we just went through, Tencent, Nintendo, and a lot of the major Western studios are in there. It's market cap weighted, so it's going to give you the top end of town for publishers and platforms. Then there's the BetaShares Video Games and Esports ETF. The ticker is GAME. It tracks the NASDAQ Global Video Games and Esports Index. So Roblox is in there, AppLovin, which you spoke about, Ren, Tencent, Nintendo. So a few more players in there than just gaming publishers. It had an incredible 2025, returning 92%. I think it was one of the best performing ETFs in Australia.
I think not for the year 2025. I think to August, 12 months to August 2025. That might be cherry picking your date range a little bit there. But
it performed well.
Yeah, video games have been an incredible performer. Both of those ETFs you spoke about have really benefited from the rise of video games.
Absolutely.
If we want ETFs that give us exposure to the digital entertainment world more generally, we do have to go over to the US. So there are three that are worth listing. There's the iShares Evolved US Media and Technology ETF, IEME, the SPDR Communication Services Select Sector, the ticker is XLC, and then the Invesco Leisure and Entertainment ETF, PEJ is the ticker. So some esports in Australia, some broader ETFs in the US. Where do we want to go? How do we want to leave, Bryce?
I think, look, there's no doubt that we've got to the end of this episode and this is a theme for the next decade.
Sorry, I just thought you were saying there's no doubt we've got to the end of this episode.
No, I think the numbers are there. Like, it's a massive growth opportunity driven by, the rise of the middle class, the accessibility of entertainment now through the mobile. It's one of those industries where we don't have to also look too far to find investment opportunities to get exposure to this. So it makes a lot of sense to me. I don't have exposure to it in my portfolio at the moment, like pure play exposure. Obviously got the big tech and the like.
That is where my mind always goes.
It's like you're going to benefit in some way.
Yeah.
And I'm probably happy with that for now.
Yeah.
There are a number of other thematics in this episode that I'm probably more interested in from a pure play point of view. In this series.
Yeah.
But how it's going to play out over the next 10 years, I think, big opportunity.
Yeah. I mean, we should be really clear because I'm the same. I don't really have any direct exposure here. If when we started Equity Mates, had bought one of these esports and gaming ETFs, it probably would have been one of our best performing holdings. Yeah. So there's no doubt we've missed this theme and this theme will continue to grow. But what I struggle with, the big thing that we've spoken about today is emerging middle class, increasing smartphone use, and increasing internet penetration. And one way an investor can express that theme is this.
Starlink.
One way we can say one industry that's going to benefit is the esports and gaming industry and invest accordingly. And you will have done very well. And, as I spoke about AppLovin up 600% in a few years and the like. There are other industries that will benefit from those three factors. And the big one that I always go to is just digital payments. Is the most obvious play for that not esports, but actually just MasterCard.
Yeah.
Or Visa, but MasterCard is a little bit more global. Visa is a little bit more US based. So if it's like the global middle class is spending more, using their phone to spend more, buying things online because of internet penetration, there are other ways to express that theme, I guess.
So the summary really is digital entertainment, MasterCard. That's where we ended.
Nice. All right. Well, if you've enjoyed this episode, if you want to catch all remaining episodes in this series, make sure you're subscribed wherever you're watching or listening. Scroll back on the feed or on YouTube to see some of the past episodes we've done. We've been loving taking the time to really unpack these themes in detail. If you want more from Equity Mates, we've got a whole range of shows you can check out. Buy or Sell has launched incredibly well and is one you should definitely go and listen to. But Bryce, with that said, we'll be back next episode.
Sounds good.
This podcast is intended for education and entertainment purposes only. Any advice is general advice and has not taken into account your personal financial circumstances. Before acting on general advice, you should consider if it is relevant to your needs. If unsure, speak to a financial professional. The host of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media is an independent entity within the BetaShares Group and operates under Australian Financial Services Licence 540697.